Welcome to the Options Income Blueprint Weekly Income Report. This is Michael Schulman on the 1st of August, 2022. Just a reminder, especially for those of you new, welcome. Live trading tomorrow at 11 Eastern Daylight. As always, I'm going to review the trades and results from last week, which actually were quite interesting given what was going on in the market, a review of the market itself, and I want to look at the two parts of our psyche here, which is the longer-term investor throwing off cash, Pfizer, and the gung-ho trader looking at charts and saying, I'm just great premium, I want to trade Roku. So last week, closed a couple of winners, a nice amount of cash coming in. We were kind of modest in how much new capital we put to work for the simple reason there were all these earnings announcements in the Fed. We had a nice net return of 0.5%, which is our target. And here are the trades. And as you can see, again, I'm not catering to those of you who haven't listened in here before. While we may have only put on a position or two last week that was new, or in any given week, or sometimes three, sometimes one, sometimes two, we roll existing and open positions because we have a cash focus, cash first. Absolute rate of return is important, that 0.5%. Annualized rates of return are the way we compare all positions. And you can see by this constant rolling, we throw off large amounts of cash. That's what the four core stocks are about: General Motors, Citigroup, Pfizer, and Marvel. And if you've been in the position since 2021, I'm sure my picture might be on a dartboard because we're underwater. But they're doing their job. They're throwing off cash, and by the end of the year, I really believe wholeheartedly that we were going to be net positive. We're going to be way, 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 way ahead of where the market is. But they're doing their job in terms of producing cash. And to that point, you can also look at what the rate of return is on the capital that we have allocated. It's a way of you and I measuring ourselves against, well, what are we really doing with our capital? And you can see the annualized rate of return is well above the target, and that is what matters. It's very, very important. And when we go to Roku and Pfizer, this will become very obvious why this is such an important way to look at the market and what we're doing inside of the market. And there's the overall performance. Very, very nice rates of return across the board. And we did this in the context of maybe the busiest, and I said perhaps the most important week of the year. In retrospect, it may very well have been. Certainly to date, it's the most important week of the year, and it may be the most important week of the year when we look back on this on New Year's Eve. The market was happy with the Fed announcement. That's probably an understatement. You can't measure the happiness of the market simply by did it go up or did it go down. You have to parse the words of people following the market, the analysts that can help move the market a little bit, and you have to take a look at how the market trades afterwards. And the market traded solidly and calmly. It was a very good July, but it traded calmly, which is really good for us. It gives us an opportunity to align our capital with the market, not worry about putting a trade on Tuesday and having to close on Wednesday because something happened. And the market was equally, if not even more, happy with earnings. For example, I'm going to focus in on one of our core stocks, General Motors. The headline was, they missed this, they missed that, they missed this, they missed that. I have a couple of Tesla fanatics in the membership going, see, I told you. But the stock went up. And the stock went up for a bunch of reasons. And one of the reasons was the transparency of the company. We're having this amount of supply chain disruptions. We're still on target for year-end forecast that we've given you, and we're certainly on target for the electric vehicle forecast for next year. The other thing is, for investors, we trade and invest mentality, we trade within. They have a different technology and a different approach to batteries. They're using nickel-based and not lithium-ion based, and that is a more reliable in two ways: reliable physically in the performance of the vehicle, and more reliable in terms of supply chains by a country mile. So GM and Pfizer, those two are two of the most undervalued. Pfizer's the most undervalued stock in the S&P 500, in my opinion. General Motors is close to being the most undervalued stock. And so that's sort of a metaphor of what you should be looking at as we go forward and as we trade these stocks. And I keep on setting up the discussion of Pfizer versus Roku, which I will get to in a moment. And be aware, I know many of you trade based on charts, and many of you trade based on what's the available premium. Mistake both times. You should be looking at companies you've already selected based on how they're performing in the real world. And higher multiple stocks, PE of 50 or 75, or perhaps no earnings at all, when they miss, we're talking Roku here, they get killed. I mean, they get absolutely positively crushed. And so while the market is stabilized, the market is severely penalizing companies that do not perform. Now, I've been trying to set up the discussion of Pfizer versus Roku. I'm a contrarian, and I'm not a contrarian by saying I like to stand in the corner and make fun of everybody on Wall Street. Actually, I do enjoy doing that. But the purpose here is to say I look at the real world first. You look at alerts that come out every week, but I'm really thinking of the real world first. And at the end of the day, fundamentals always win. Always is a very strong term. Fundamentals always win. They may take a year to play out, but they win. And that's all I'm concerned about. So if we have to roll a position and throwing off cash, we're doing 40% annualized return in cash. If we trade off for a month, who cares? The bottom line is fundamentals always win. And if you disagree, well, frankly, you're wrong. Now, I want to define the term win out. Many of you, I've seen this, I've heard this actually, I haven't seen it in email. How do we win out at the end of the week? Well, you don't win out at the end of the week at Friday at 4 o'clock. Because something could happen on Thursday afternoon. I always remember a six-figure portfolio coaching program when we did it as a separate program. It's now part of the master's program. The China devalued the yuan on a Thursday afternoon, and our 4 or 5 or 6 positions just went kablooey. And we ended up making money on all of them within 3 weeks. But if you closed out on Friday, you took a huge loss. So by assessing how you're doing, your performance, my performance at 4 o'clock on a Friday, that's a big mistake. What you need to do is go back, focus on your goals, focus on your definition of risk, and what are the real world fundamentals of the company. And then you look at the valuation of the stock. Should you be trading it now? Are there events coming up? And you need to measure your performance in cash, what's it producing, and the rates of return on your trades. So I'm sort of lumping together and rewriting a bunch of questions I got on Roku and Pfizer, but they really represent bipolar sentiment within the membership base. Should we trade Roku? The premiums are off the charts. Now, I get this about a bunch of companies, and a lot of the time the answer is, well, they're off the charts because earnings come out in 5 hours. And as you know, I like to avoid earnings as much as we can. So Roku is a stock you never, ever, ever trade before earnings. We traded it quite successfully on and off for a few months. And we were watching during earnings week. There's no way anybody should be in the position. Roku missed estimates. At one time was down 29%. It fell 23%. Not 13, not 3, 23% in a day. I hope you didn't sell a put. And why are we still in Pfizer? And this could be from someone who has been trading it much longer than you have, maybe from the original position dating back to last year. They have $54 billion in expected COVID-19 revenue. It's almost not even factored into the valuation of the company, and I kid you not. It's the most undervalued stock in the S&P 500 based on traditional metrics such as growth in earnings per share and earnings per share on their own. And it sold off initially and is still down from when earnings were announced. And I've said this many times, you may be bored with hearing it. It's as if the street believes COVID does not exist. It is astonishing, especially in the light of Pfizer using its cash to buy companies to enter or solidify a position in a new market, which is exactly what they should be doing. So just a heads up, because I did get questions about this after the Roku earnings came out. With Pfizer selling at 7-point time forward earnings, now that's consensus. I think they're selling closer to 6 or 6.5, but let's go with the wisdom of the crowd on this one. That's less than half of the multiple, the S&P 500, and it's growing significantly faster than the S&P 500 typical stock. We can do about 0.8% every week or 42% in a year. Where I grew up, that's a lot of money. And if the market ends up the year down 15 or 17%, we could be up between 20 and 40, depending upon where you entered the position. So the stock is clearly going to beat the market. And last Friday, if you sold the $50 put, assuming it would hold there, which would be, or you'd be willing to own the shares at that price, in 1 week you'd have a 1.5% return, which would be 80% a year, not 42. And we're going to continue to trade ROKU, but we're trading it opportunistically. You can do 1.5 to 2% in a 7 to 10 day period constantly, not every week, but when you opt to trade ROKU, as we will, that is what you can expect to see when you see the alert. But I'm going to wait a little bit to see how things shake out and how it's going to trade the first couple of days of this week. And we're going to trade Pfizer, as we have in the past, with close to the money puts or close to the money calls, and go in and out. I don't care if we're assigned, if we get the shares, I don't care if we're called out. It's all about boosting the overall cash producing power of the position. And we're going to trade ROKU with silly puts. That's 10% out of the money if we're trading it for, let's say, 3 to 10 days, and 15% out of the money if the expiration date is more than 10 days out. And we've done that very successfully. We avoided the catastrophe of last week, and we will continue to be that nimble. So trading this week, speaking of nimble, we have to be nimble. I haven't had any emails within the last 3 weeks about why did we spend this cash to buy something back. I think you're all getting it. This is almost the income madness. For those of you unfamiliar, 6 days of trading, 15 to 18 trades, and closing things out very quickly. I think we're doing 1 or 2 of these in the fall. And the bottom line is to be nimble and aggressive at the same time. And one of the things you need to juxtapose this against is August. August is a very light trading month. Always is, not just because of this year. So please, use limit orders. Manage them. Don't go below the go as low range. There's always, another trade or 2 or 3 on the horizon. So thanks for listening. This is Michael Schulman, and I will see you in trading tomorrow.